Bloomberg's market correspondent Kriti Gupta joins us now with her chart of the day. Wait, is this focused on mining?
It's not focused on mining.
Oh, okay.
It's actually focused on the S&P 500. But don't worry, it's not tired at all, or cautiously optimistic for that matter. We should look at the S&P 500. I really want to show the volatility. For our radio audience, this looks a lot like an EKG chart, honestly. But stick with me, I'll explain it.
That's a dangerous EKG.
It does look like a dangerous EKG. It's not exactly a good one, but this is what I'm trying to show here. You have two lines. You have a white and a purple. The purple, which shows the rolling 5-day overnight performance for the S&P 500. Right over it is the white, the S&P 500 rolling 5-day intraday performance. The difference is what people, say traders in Asia and Europe, are trading in terms of futures versus what American traders, or at least are trading during American hours. And what you're seeing here is that although it's pretty normal and pretty kind of natural to see that that intraday performance is going to be larger than the overnight performance traditionally, but what you're seeing in the last couple of months is this volatility spike. The range in which you're seeing the moves are much, much larger during the intraday session, which tells you that perhaps a lot of that volatility, a lot of that kind of flip-flopping between red and green, it's really coming from the American hours, whereas the European side, the Asian side, the overnight trading really sticks into a range. It speaks to, once again, what different parts of the world are feeling, Anna.
Yeah, and you wonder then what is driving that volatility, Chrissy, because it has been, of course, the talk about inflation and how high rates get. We saw that as a dominant theme for so long, but now maybe it is about global growth. So interesting in that context, if it's about global growth, then interesting that global investors aren't necessarily creating that volatility that we see in stocks.
Exactly, and I think that's the key point of the chart here, that you're actually seeing that this kind of risk-off mood, it is becoming more in terms of recession odds instead of inflation, and this global recession, regardless of how shallow or deep that might be. And I think this is really where the dollar comes into handy. We've been seeing this correlation between the S&P 500 and the dollar really emerge, or inverse correlation, I should say, and that really perhaps is driving how the world, or the rest of the world, feels about American stocks right now.